Hi, I'm Jessica Amir for the Finance News Network. Joining me from Inabox Group is its CEO and Managing Director Damian Kay. Damian, welcome back.
Thank you very much.
So for investors new to the company, just give us a quick recap.
We started the business more than 10 years ago, and today, we're in more than 12 locations. We turn over more than $100 million a year in annualised revenue, and we do that across 3 channels, selling managed IT, managed telco and managed cloud through those channels.
Now to your first half 2018 results, just give us the highlights starting with finances.
There's no denying it was a disappointing result. In November we identified a small number of customers in the Hostworks from the Hostworks acquisition. We're rationalising their spend with the Hostworks business, which was unexpected. As a result, the EBITDA, the underlying EBITDA, was roughly in line with the comparable period. In a way, it's a credible result given that we had also sold HCS and we've managed to replace that revenue and profit. But overall, being a flat result is fairly disappointing. From a net profit after tax point of view, they were impacted due to that Hostworks situation that I mentioned. We wrote down some of the value of that investment to the tune of around about 1.3 million, and also due to what happened in November, the redundancy costs that followed through those cost-saving initiatives. So overall, a disappointing result. We now move forward from there.
And what were the operational highlights?
The Hostworks situation has really overshadowed, a lot of good things and a lot of positive things that are happening within the business. In December we signed a landmark agreement with Telstra Wholesale to provide white-labelled enablement services to their customers. We've put on a record number of wholesale customers in that channel, and including $4 million annualised revenue of existing business that we're migrating during the second half. The enablement channel continues to perform strongly with growth of 80% as SIOs start to come onto that platform and those investments that we've made there as well. We extended our credit facilities and our debt funding with the Commonwealth Bank for the next 3 years to 2020, and we continue to trade within our covenants.
And can you give us an update on the Hostworks business?
The focus for the last couple of months has obviously been to settle the teams, post the changes that we made in December and those cost-saving initiatives, which included obviously a number of staff leaving the business, and also stabilising the revenue base. We've now done that, and our focus now is truly on growth, and we've managed to sign a few new customers onto the Hostworks platform. And also one of the big initiatives that we were doing was to simplify the cloud product, and so that we can actually sell that, and it's called Cloud in a Box. We can now sell a very simplified cloud product through our existing channels, and that is a big focus, and that is now in a proof of concept stage as well.
And earlier you mentioned growth, and I'd just like to hone in on that, talking about growth and profitability. What really is the breakup between one-offs and ongoing revenues?
Yeah, look, the business is very, very strong in recurring revenues, and it continues to be a focus for the business, including the Hostworks business that we acquired. We've got 81% of our revenues are recurring compared to project work and hardware that we sell to some of our customers, which only represents 19% of the business.
So what areas are growing the fastest?
Yeah, there's no denying that the enablement business and the wholesale business is powering on. We continue to put a record number of customers into the wholesale business, including 3 new customers that have existing spend with other carriers. And we'll be migrating those customers over in the second half of FY18. And the enablement business, of course, we continue to grow that business with revenues up over 80% and a number of large brands, national brands, in the pipeline, and currently working through that to bring to onboard those customers as well.
So last question now, what's your outlook for the second half of this financial year?
The second half of FY18 will be roughly in line with the first half underlying result. That's as a result of us continuing to replace the lost revenue and margin from the HCS business, as well as obviously stabilising the Hostworks business. Our focus really is on continued growth and organic growth as we bring on new customers in the enablement channel, continue to realise the gains of the customers coming on in the wholesale channel, and we continue to focus purely on organic growth and organic growth.
Well, Damian Kay, thank you so much for the update.
Thank you very much, Jessica.